Good morning. It's Jeff Christian, CPM Group. It's about 10:37 in the morning, 18th of July, Tuesday here in New York. I want to talk about our shorter-term expectations for gold and silver over the course of the rest of July and August, and then into the final 4 months of this year. Financial markets right now are waiting for the Fed's open market committee meeting next week. 26th and 27th, the markets have been fluctuating between whether or not the Fed will raise interest rates or not. The last time they raised rates, it was kind of positive for precious metals. There are expectations either side, and it flops back and forth. The data that's coming out economically, the inflation figures were lower last week. Industrial production was off this week, but it was mostly consumer goods. Business equipment production was basically flat in June, which was a good sign because it had fallen in May. So there's signs of weakness there, but there's signs of strength in consumer spending. So it's a mixed bag economically. Which is what we have been expecting and predicting and warning about. And in that environment, precious metals and other financial assets have been moving sideways. Now, we may be seeing another shift in financial market sentiments toward the idea that the Fed can control and is bringing under control inflation, maybe faster than a lot of people, including CPM Group, thought possible, without sinking the economy into a recession. As I said, it's an economic mixed bag right now. And the financial markets seem to be saying, okay, maybe the Fed knows what it's doing and it's actually managing monetary policy well. And the world's not collapsing and the U.S. is not already into the next depression, et cetera, et cetera. This could be positive for gold and silver as well as other financial assets because the lower inflation that we're seeing could lead to lower interest rates and interest rate expectations than have been abroad in the markets over the last few months and in Fed official comments over the last few months. And that could be positive for the valuations across financial assets. So we could see some greater strength in gold and silver as well as stocks and corporate bonds as a result of all of this. Also, we're now entering the quarterly earnings statement period for U.S. corporations, and there are signs that they're going to be stronger than expected. There were discussions about the banks suffering mightily because of the higher interest rates, but the couple banks that have announced earnings so far have announced, in one case, record earnings, in other cases, pretty strong earnings. So you have a situation right now where financial markets, including gold and silver, are looking relatively strong, and that's good. August could see a shift, and we could see prices a little bit lower. And then later on, beyond August, we could see gold and silver prices rising. Right now, our view is that gold is holding around $1,970 as I speak, a little bit below that, but it's moving higher. It's already, even at 1970, pretty close to its record highs. It could come off. It may hold above 1900 over the next 6 to 8 weeks. That would be a very positive sign. It may hold above 1880. We wouldn't be surprised or worried even if it fell as low as 1850 over the course of August and September. August is an active COMEX month. I mentioned last week that there was about 3 million ounces of open interest in the August contract as of last Thursday that had to be rolled or closed or delivered into. It's down to 2.4 as of Monday. That's off 1 million ounces from 3.4 the previous Monday, last Monday. So what we're seeing is an orderly roll. It may not push gold prices higher between now and the beginning of August, but it may help support gold prices at relatively elevated levels. Once that roll is behind the market, and once the Fed has made its decision on the 27th of July, then there is some scope for somewhat lower prices. But we don't see prices going down. We've said it over and over again. We don't see prices selling off the way they did last year. We don't see 16.25 or 17.50. We wouldn't be surprised to see 18.50, but that's about as low as we think it's going to go over the next 8 weeks or so. Silver is a very similar situation. Obviously, it's not at near record highs, but it's held up pretty well. It's trying to maintain itself above $25 right now. We wouldn't be surprised to see the price come off to $22 in August. We published our views that a spike down to as low as $21 or $20.75 is possible, but we don't see it necessarily going lower, and we don't necessarily see it going as low as it was in March or so, late February, early March of this year, when it got down to around $19. We really don't see it going below $22 over the near term, and then we think it's going to be a little bit higher. I want to talk a little bit about the dollar. And I woke up this morning and I was looking at headlines. I saw one of the perennial gold bulls waving his arms saying that the U.S. economy was already collapsing and we just didn't know it, which is probably not the case. And the dollar's not collapsing. You can see the dollar has declined sharply over the last few days. It's back to where it was in May. I believe it was February. That previous low was in February of this year. And the dollar, even with the big sell-off over the last few weeks, remains higher than it has been from July 2020 through April 2022. And if you look at the longer-term chart, you can see the dollar is much higher than it was from really around 2002, when the dollar started coming off. In early 2002. By late 2002, it was below where it is today, and it stayed at those low levels really through 2015. It started to rise around late 2014, and it's shown strength up until now. Doesn't look like it's collapsing. So it's pretty much steady as it goes for the rest of July. Everybody was waiting for the FOMC. In August, hopefully I'll be taking a vacation along with everybody else, and you have some scope for a little bit of weakness in prices. And then after that, we think that the prices will probably strengthen, not because of monetary policy issues, but because you could see some issues with fiscal policy. The U.S. election season will really be ramping up in August and September. And it's going to be a real clown show, which is not going to help investors in their expectations of the stability of the economy. And you'll also sort of see the real economy, supply issues, and demand issues moving forward. There are a range of issues to pay attention to. Next Tuesday, we will be launching our Platinum Group Metals Yearbook. You can go to cpmgroup.com or send a note to info@cpmgroup.com and sign up to plug into that free online briefing next Tuesday at 10 a.m. And then you can also buy the book. It's $160, and it will give you the definitive word on platinum, palladium, rhodium supply and demand. After that, I go down to Boca Raton, Florida, where Rick Rule's group has asked me to speak at their Natural Resource Investing Conference. And they asked me to talk about the topic of the world is not ending, but you can still make money on gold and silver. So I will. I will be showing basic economic data, disputing some of the crazy things that you continually hear from gold people about the dollar collapsing or the treasury collapsing or or the world collapsing or this great conspiracy for a currency reset, which was imminent 2 years ago. And for the last 2 years, you kept hearing, oh, it's going to happen in July 2020. Oh, it's going to happen in July of 21, August of 2021, December. And now they kind of sort of have quieted down. So I'll be talking about some of the realities of the world economy and the U.S. economy. And I'm also going to be talking about how investors actually can invest in gold and silver profitably, and what gold and silver has done for investors who invest wisely over the last 40 years. You're welcome to join us there. You're welcome to go to our website, download our reports, download our videos, and plug into other aspects of CPM Group's research and consulting services. Thank you. Take care of yourself. We'll talk on Friday. And in the meantime, see if you can do something good for the world.